Hey, lock in with me for a minute because the narrative on silver just did a complete 180. While everyone was still talking about China's trading halts and the 36% premiums, the market just served up a brutal reality check. Silver crashed hard. We're talking a 30% single day drop on Friday. The price we were just looking at, $85 an ounce, it got hammered. And right now, the financial media is scrambling to tell you why it's all over. They found their expert, Jeffrey Christian from CPM Group, and he's laying out 3 warning signs that this plunge could get a lot deeper, potentially down to $68 an ounce. Before you panic or think everything we broke down was wrong, you need to hear this. Because this isn't the end of the story. This is the volatility we talked about, hitting the middle phase of a bull market. The weak hands are getting shaken out in the most violent way possible. So let's walk through their 3 warning signs, because understanding the bear case is what keeps you from becoming a weak hand. Warning sign number 1, when trading activity stumbles. The expert says to watch for a loss of momentum. He points to the insane retail frenzy that was happening just before the crash, a record $171 million flowing into the iShares Silver Trust in a single day. His argument is simple. When that feverish buying stops, the music stops. The momentum that pushed silver up 200% can reverse just as fast when speculators run for the exits. Friday's 30% drop, he calls that the first wave of profit taking. Warning. Sign number 2, when new silver supply hits the market. This is about the physical balance. He notes that the supply-demand gap has been narrowing. Supply is estimated to grow, demand to pull back slightly. He also points to a telling detail. Refineries are backed up with silver from investors who are already selling. His point is that if more of this hoarded metal comes back to market, it could flood the system and kill the scarcity narrative that fueled the rally. Warning sign number 3, if open interest falters. This is the futures market engine. There's a massive amount of open interest in silver futures contracts, around 500 million ounces for March 2026. As long as those contracts get rolled forward, it creates upward pressure. His warning is this: if investors let those contracts expire instead of rolling them, that supporting pillar gets pulled away. The sheer weight of those contracts closing could accelerate a downturn. Now here's the critical context they're leaving out, and it's exactly what separates the prepared from the panic. First, the crash catalyst. This wasn't random. It happened as the US dollar strengthened and markets reacted to news about the Federal Reserve leadership. This is the monetary policy chaos. We talked about the central bank whipsaw in action. Hawkish sentiment returns, the dollar rips, and metals get hit. This is the volatility of the middle phase. Second, listen to what the expert actually believes long term. He says, and I quote, "Silver could remain elevated or rise through 2026. Why? Because the overarching concerns about inflation, dollar strength, and safe haven demand are still there. He's warning about a short-term speculative flush, not calling an end to the long-term thesis. This crash is the other side of the 58% monthly gain. It's the 30% drawdown in a week we said was possible. The greed has been washed out for now with fear. So what do you do with this? If you're a short-term trader, this volatility will wreck you if you're on the wrong side. This is why we said don't chase at the highs. If you're waiting to get in, a shakeout like this creates the pullback opportunity we discussed. If you're a long-term accumulator, this noise is irrelevant. You're not buying for next week. You're buying the decade-long thesis of debasement, industrial demand, and the repricing of hard assets. A sharp correction in a bull market doesn't invalidate that. It's a feature of it. The bear case is now the loudest voice in the room. They'll say the bubble has popped, but ask yourself, did the structural reasons for owning silver change in a single day? Did the green transition stop? Did geopolitical risks vanish? Did the physical buying from dealers we cited just disappear? No. A parabolic move got a parabolic correction. The trend is now being tested. Here's my final take. The experts' 3 warnings are a perfect roadmap of what to watch if you believe the rally is purely speculative. Watch for fading retail interest, watch for rising inventories, watch for collapsing open interest. But also, watch the physical market. Watch the gold-silver ratio. Watch to see if this plunge triggers another round of explosive physical buying from people who see cheaper prices. That's the real signal. The middle phase of a bull market is where convictions get tested. The narrative today is crash. Your job is to see through it. Drop a comment below. Do you see this crash as a healthy correction or the start of a major bear trend? If this clear-eyed breakdown helped you navigate the noise, hit like and share it. Stay sharp. I'll see you in the next one.